Hi guys, in this video I want to show you why you need only one higher time frame candle in order to succeed and become profitable in your forex trading career. Now, no more confusing strategies about trading. After this video, you're going to understand the easiest way to trade profitably. You just need only one time frame in order to succeed in trading, and I'll prove that to you. If you follow this video carefully and if you pay attention, you're going to have this right way to trade, and you will understand that it is the best and the easiest way to approach the forex market. When I'm talking about higher time frame, you are looking at the daily time frame, the H4 time frame, the 1 hour time frame, and the lower time frame, the corresponding lower time frame entries could be 15 minutes time frame, the 5 minutes time frame, or the 1 minute time frame. All depends on the type of trader you are and whether you're a day trader or possibly maybe like a swing trader or a position trader. But I would recommend being a day trader in order to use this strategy. The strategy models in this strategy I'm going to be showing you, we have the continuation model of it, we have the bearish and the bullish continuation model, you have the reversal model, the bullish and the bearish reversal model. Just stay with me on this video, it will change your life. So for the continuation model, it's actually based on your understanding that if price breaks above a candle and provides a corresponding demand zone or FVG, that's the fair value gap, then it will continue to buy. And on the flip side, if price breaks below a candle and provides a corresponding supply zone or FVG, then it would continue to sell. So what do we mean now? For the bullish continuation model, I actually mean that this is the candle we're talking about. This is a higher time frame candle, which could be daily candle, could be H4, could be H1 candle. So you have the high, the candle high, the high of the candle, and the low of the candle. Now you're looking for price to break either the high or the low. But if price breaks the high for the bullish continuation, you just want, this is the lower time frame. So when you identify the higher time frame setup, a candle, any candle whatsoever, it could be H4 time frame, could be H1 time frame, could be a D1 time frame. Just identify a higher time frame candle, and you mark the top, the candle top, and the candle low at the wick. And so you now have to step down to lower time frame. Once you step down to lower time frame, you want to see that either the high or the low is broken. So you're going to put a horizontal line at the top and the bottom. So on a lower time frame, you are waiting for either the high or the low to be broken. But for a bullish continuation setup, the high will likely break. So once the high breaks, you want the market to break structure to the upside. You could take your entry somewhere around here, all right, or you want the market to break a second structure. So the market broke structure number 1 and number 2 in this case, and then you are looking for your entry here. This is like a demand zone created. You get your confirmation entry here, and you take the market up. So this is one setup that you need to understand, and it will make a difference in your trading. Let's look at this example here. This is a H4 time frame of GBP USD. So on this time frame, you can see this chart. Let's look for a continuation, bullish continuation. So you can actually see here that we mark here the high and the low of this candle, and if you move down to lower time frame, you would see how it's going to be. So on a lower time frame, you can see that the market broke above the high. This is 30 minutes time frame, and the market broke above the high, came down. You would activate your FVG somewhere around here and rolled up. Okay, so this is what I'm talking about. So here you can see that the market broke up. There's a zone here, okay, that the market came to. The market came to this zone, and from there it bought. All right, so if you could as well step down to 1 minute time frame to get your entry confirmation around here, with which you could enter the trade. So, and also you need to pay attention is that the high here was broken, the low was not broken. So once the high was broken, know that it's going to be a bullish continuation setup if there's this entry confirmation way that you could enter. Okay, so the market rolled up and as well came back again. If you didn't get an entry here, you can as well enter on this FVG here. All right, the fair value gap, there's a fair value gap here that you could have. There's a fair value gap there. Here, this is a fair value gap. So from this fair value gap, you could have also get your entry to ride the market up. Okay, so you see it. So now for the bearish continuation, you identify just the same way, just that the difference is that the market will break on the lower time frame, will break on the low. So here, this is the high, this is the low of the candle, your higher time frame candle. So you identify, you mark the high and the low on the, you place this horizontal line on the high and the low, and you now step down to lower time frame. So you step down to lower time frame, and once you step down to lower time frame, you're going to see something like this. The market will move in this fashion. The market will break the low of your candle, of your higher time frame candle, that line, and now come back, retest the line, retest the zone, and possibly create a break of structure. You could enter of this first break of structure and return here to the FVG or order block, as the case might be, or you wait for a second break, then you could enter here as well. So there are different ways you can enter the trade. So what is more important is that the market broke the down, broke the low of the higher time frame candle, which gives you a first sign that the market is going to have a bearish continuation. Okay, so let's look, for example, like look at this case now. This is also a GBP USD H4 time frame. So we've identified this candle. So on this candle, there's the high of the candle, the low of the candle. So if you should move to lower time frame, you can see, if you move to, you just mark that candle, move to lower time frame, you can see that the market broke this low. The market broke this low, returned here to this FVG here, break another low again, return to the zone, okay, from where it now sold down. So there are different ways you can enter. So the market broke the low, bought or sold from the FVG here, gave us another low, break this low, break of structure, came back to this zone, tapped into the zone, and sold from there. Okay, so now let's look at the reversal model. The more reversal model of this strategy is based on the principle that if price wants to go up, it will first hunt retail traders. Then in that case, you should enter a buy after the entry confirmation. And if price wants to go down, it will first hunt retail buyers. That's by buying up. If price wants to buy, it will first sell. And if price wants to sell, it will first buy. Then you should enter the trade accordingly in a lower time frame. So now let's see the example clearly. Now this is the bearish reversal model. This is a higher time frame candle here. The higher time frame candle. So you want to look at the high and the low. You want to see that the market breaks either the high or the low. Okay, so this is the higher time frame candle on a lower time frame. You could see that the market broke this low. The market is not intending to continue in the low direction. It just took out all the liquidities here. Okay, the market took out all liquidities at the low and now buys up, breaks this structure up. Okay, had it been that the market broke this structure, break the low, it will continue this way. That is to say that there's going to be a bearish continuation, as we just saw in the case before. So but the difference is that the market broke up, all right, broke this low, the lower time frame, and reversed up, breaks structure to the upside, reverses into the zone. This is like an FVG that you could buy from, or you want to wait, you might want to wait for this break of structure, second break of structure, and you enter on this FVG, or the market could as well sometimes come back to the order block for you to get your entry. Okay, so let's look for an example. Look at this GPUSD H4 time frame. So you can see here, this is this zone, higher time frame, H4 zone. So if you step down to lower time frame, you would see that this is the high of the higher time frame candle on the low. The market broke down but did not give like a bearish continuation. It broke down. In the essence of breaking down is to take out all the liquidities. Okay, liquidities taken out, and the market broke back up. In this case, the market did not really buy this way. The market bought with a long momentum. Okay, but in some cases you would see the market will break to the upside, give us another break of structure to the upside, which could give you your entry here or your entry here, and you could buy up. All right, but in this case the market just bought up subsequently. So this is the bearish reversal. In the bearish reversal, just the flip or the opposite of the bullish reversal. So this is the higher time frame candle, the higher time frame high and the low. You want the market to break the high. The market broke the high, took out all the liquidities here, and then instead of buying up, okay, it dropped down, all right, brought down and took out this break of structure, took this LVG as a springboard to sell down, break the second structure. This can be an entry. This could be entry number 1, entry number 2. In fact, you can have entry number 3 here if you wish. So let us look at this example. This is GBP USD H4 time frame. This candle. So let us see how the reversal would have happened on a lower time frame. Okay. So on a lower time frame, we have that candle, right? The high was taken out, but it came back, break of structure here. So there is a return to this other block here, which could have been like your entry, and you ride the market down. The market as well broke this structure again, provided another opportunity with like coming to the FVG here. This is the second entry down. Okay, so this is possible entry number 1, entry number 2. First break of structure, second break of structure, giving us your entry number 2. That's you can ride the market down. Okay, now this is another example, H4 time frame. If you should see this candle and how this would have sold on a lower time frame. So this is the high of the candle, low of the candle, and the market broke structure to the upside, taking out all these liquidities, then came down, broke down, break structure to the reversed up into the zone and sold with a very lovely momentum. This is supposed to be a take profit. All right, the take profit for this strategy is supposed to be, your first take profit supposed to be at, if you are selling, it's supposed to be at the low of the higher time frame candle that is here, and if you are buying, it's supposed to be the high of the higher time frame candle. All right, so you see how the market came back to this zone and sold. It was a lovely setup. The market sold all the way right from here. After activating this zone, it sold down. Take profit taken, then you can ride the market down if you want trade or stop loss. So this strategy is one strategy that if you really practice this strategy and understand the workings of the strategy, master the strategy, it could be a very, very important tool to give you consistent profit from the forex market. If you want to trade strategy on a high volume session like the London session or the New York Open. You can try this strategy on the forex market. If you are indices, you can do it on indices, on any market instrument. Just try to backtest it and see how it works. If you want to join this YouTube channel, kindly subscribe. Give this video a thumbs up if you found value from it. And if you're here to join our Telegram community, the link to join is in the description box of this video. If you want me to mentor you one-on-one, help you take it by hand, help you to become a profitable trader, do give me a shout out. My contact is in my free Telegram community, and the link to my free Telegram community is in the description box of this video. Alright, till I come your way next time with another wonderful and useful content, do have a wonderful day ahead. Bye.